Okay. Um. Okay. Let's get to it because I mean I'm a bit busy at the moment, so I just wanted to analyze what has been going on in the market. So, firstly, I'm gonna go to my daily time frame since it's my bellwether time frame for direction. Remember yesterday? I'm just gonna do this. Come on, man. What's wrong with you? Let's enter your black zone. Yo, the fuck? One day. Okay, now remember, we have been bullish, right? So the market has been bullish for quite a while now. Since the market has been bullish, um, my eyes were located here. Let me just text. Let me just write buy side. Let me just remove this and just write buy side liquidity daily top. Then I put it on the left side of things so that we can see. So remember, this is the Tuesday's candle, right? So on Tuesday, the market did what? I think I showed it on the previous video where when I was trading because I've been bullish. The market had been bullish, and we broke structure here, right? So after breaking structure, what would you anticipate? I would anticipate price to retrace, to retest. I'd anticipate price to retest, but retest to where? So my main focus was this fair value gap, this entire fair value gap here, and also let me just make it a full screen. My main focus here was this entire gap here, this entire gap here, and also I looked at this um order block, this bearish order block. So I was looking at this order block as my key zone, also looking at this fair value gap because in my mind I was like, if it would come to this and close out this fair value gap, it might weak outside the fair value gap and just to cause damage to take out the sell side liquidity. So remember, the weak is they use it to what? For damage, but the body tells the narrative of the market. So I was bearish. So Tuesday, this is Tuesday's trade. This is Tuesday, yeah. This is Tuesday. So Tuesday went into this uh daily, went to this daily order block, right? Reached the daily order block, and this entire fair value gap here was filled. And also knowing that I am bullish, this was just a retracement, right? Then this was yesterday, which was I think it was Wednesday. So Wednesday, I anticipated to see what a retracement back up, making a midweek reversal, right? That was my goal for yesterday because I looked at this, it broke out, so I wanted to see how this would close, right? And this closed with what? This closed, making a swing low, creating a swing low. Now I know this area here, it won't be broken now, right? So it created a swing low. After creating a swing low, right? The market did what? Just went up and just closed the bid. So I'm currently bullish. As you can see from my journal, I think this is yesterday's. You see, I was looking for a midweek reversal. Let me just make it full screen. So we had news yesterday. I think you saw the video. We had news yesterday at 8:15, 10 a.m. and 12:10. Remember, this is the week for NFP, right? And my prediction my prediction for Nasdaq. You see, this is where it's prediction, right? So my prediction was I wanted to see price go a little bit down and continue to go up, looking for what? Looking for this as my draw on liquidity. Because if you can see here, this is also what? A swing point. This is a swing high, right? So this making these two things relative equal highs. So I knew that this here is my liquidity zone, right? So this is what I wrote. Remember, you have to have a journal. It's important that you should journal everything, your trades, your thought process, and everything, so that you'll be able to understand and know where are you, in analyzing the market. Because if you don't journal, you won't see your progress. You understand? And what did the market do? Let me just give me a second. What did the market do? The market went up, making what? A swing low. So I would want to see a continuation where I would want to see a continuation up. You understand? Making this my first draw on liquidity, then this one my second draw on liquidity. Well, then I roll back. After this was my prediction. This was the actual. As anticipated, NQ had a bullish day, forming a swing low and a mid reversal. So I'm gonna go back. You should have a trading journal. You should journal your trades. You should trade your trade processes. You should trade. I mean, beg your pardon. Sorry. You should have your a trading journal. It's important that you have a trading journal so that you can look at how the market. Like, no, man, you should have a trading journal. I'm gonna cut this off. Okay, let's go back to trading. So now I'm gonna go to my 1 hour time frame. Remember that I want to see the market being bullish, right? So that tells me that I want to see when the market opens. Let me just close these things here. I think they're creating a lot of noise. I'm gonna bring them back. Remember, what was my draw liquidity? This was yesterday's previous day's high, and this was Tuesday's high, whereby I was looking for this to be taken out, right? Like on a daily. This is this was my drawn liquidity for today. So what I would anticipate price to do when the market opens. The market opens at what? New York midnight, right? Since the market opens at New York midnight, I want to see what price does from midnight open until 5 o'clock, right? So the market retraced down, creating a Judas swing. And where was my draw on liquidity? My draw on liquidity was this low, this swing low, this Asian low, and this fair value gap. I don't know if you see it. So, meaning I know that I'm bearish, right? The idea is that I'm bearish. So, I want to see the market when the market opens. If I'm bearish, I mean, when I'm bullish, sorry. If I'm bullish, what I want to see the market do first from midnight until 5 a.m. is to go the opposite direction. You understand? It has to go the opposite direction, seek out liquidity. And where is liquidity? Liquidity is here. There's this low here and this fair value gap here. This fair value gap here. I want you to look at something. There's this fair value gap here, right? So from this fair value gap, this is my highs and lows of the fair value gap. So usually the market, I want to see if the market will return 50% of this gap, right? So the market retraced into the 25% of this gap. Why this 25% of this gap? Remember, there's also this order block. But there is a lot that you should pay attention to. So there is this order block here. You see, it didn't even break into it. So it reached the 20, 15, 25% of this range here, right? So from there, I would want to see a displacement up to break out the Asian high. Remember, Asian low was taken out, right? It was part of liquidity and entered the fair value gap. So it used this fair value gap as a rock climber to continue going up, right? This is early in the morning. It did as I anticipated it to do. It went below the opening, the New York Open. It went below, seeking what? Liquidity. Seeking what? Liquidity. So I'm gonna go to my 15 minutes time frame. Then from there, on my 15 minutes time frame, I would anticipate to see price. Remember, it won't be to the 25, and you must notice the bodies. Remember the wicks. I used to create to cause the damage, but the body tells the narrative. So when I go into the 15 minutes time frame, there's this fair value gap here. So if I can look at this fair value gap, I don't usually when the market went below, I usually use this one. I no longer use this one. I use this one as my fair value gap, this range here, because this little range here was closed, was filled. So the only piece that's left is this one. So what did the market do? The market went inside this fair value gap. Bruh, it's crazy. You're gonna see. I'm gonna show you some things, bro. It's amazing. It's amazing, bro. So what did the market do? The market went into inside this fair value gap, right? And if I can use this here, look at this. Went into 50%. The half of this fair value gap went up, kept playing up and played. Look at the body. Look at the body. What was this? You understand? So you have to understand those things. Those are key areas that you should be looking at. So this will be my draw on liquidity, this low and this fair value gap here. So it went inside the fair value gap. Okay. I want you to see something. Created a swing low here, right? So you would anticipate it for it to go up, right? But what did it do? Look at the body. The body is what? The body still it's not below this low here. It's above it, and the wick was used as a what? Exactly. You understand? So I wait for New York. I don't trade London. I wait for midnight until 5 o'clock, which is around here. 5 o'clock. So 5 o'clock was. Sure, sure, sure. Oh yeah, yeah. Yeah, I got board. Okay, let's continue. So since my Asian law has been taken out, my Asian law was taken out. So I wouldn't want to see Asian high being taken out, but I wanna see it being taken out with what? Displacement. I wanna see displacement. That's what I like. I like seeing displacement. So from there, I'm gonna go to my 5 minutes time frame. I want you to see these things, man. So the market kept on doing what? Just playing around there. Playing out. Just look at the body, right? I want you to look at the body, bro. Just keep on touching. The body did not close above the Asian high. Kept on playing below. Then there was what? Displacement up. Displacement up. And it closed above the Asian high. Right? From there, I want you to look at the time because remember, time and price go hand in hand in the forex market. Period. So from 7, ICT says that from 7, right? 7 until 11. Um, 11. Not South African time. Eh, but later pause. Not South African time. New York, Baba. New York, Baba. So this is my New York. New York kill zone. Remember, my bias is what? Is bullish. So after this displacement up, I would anticipate a retracement. But a retracement where? Right? A retracement where? I'm always looking at 50% and below 50%. It went to the 75% of it. This is like almost the low of the fair value gap, right? Because I knew that here it's above 50%. It's not at the it's still at premium. I want to buy it at discount. You understand? It kept on playing inside. Look at the body. Look at the body. Don't look at the wicks, but look at the body. The bodies kept on playing inside this fair value gap. The bodies kept on playing inside this fair value gap. The wicks are the ones that do what? The damage, Baba. So I would have entered my trade in this fair value gap, right? Let me just make an example. And also, you have to remember that it, depending on your what, depending on your account, right? Because hey, remember, man, this is Nasdaq, bruh. It doesn't play. So my entry will be here, right? Let me say I entered here. When it entered here, I would have entered, right? Then I'd say I wanna risk 5%. So what do I say? What I mean when I say 5%? Usually, when I say 5%, I'm looking at this. So these are the pips, 8.6 pips, right? So let me say, for example, I'll be willing to risk 10 pips, right? So if I'm willing to risk 10 pips, how much am I willing to make? 20 pips, right? And my drawn liquidity, where's my drawn liquidity? My drawn liquidity is here. So that's like 30 pips. So the ratio is like 1 is to 3, right? So this would have been my entry. And imagine the entire thing. So maybe I would have put my first TP here, then my second TP. Let me show you. My first TP would be here, and my second TP would be here. But what I want to see is the market taking out this guys here. But remember, tomorrow is NFP, Baba. Tomorrow is NFP, so the market is just preparing itself. The market is just preparing itself, Baba. So I don't know if you understand. So I could have entered this one trade and I'm out. You understand? Just that one trade and I'm out. I'm not gonna trade anymore. I'm not gonna have all those many trades and whatnot. No, just one trade and I'm out. But you don't need to be trading like 10 trades a day. You just need that one single trade, high probability trade, right? And you'll be risking 1% to make 2%. If you make 2% today, you make 2% in 3 days in a row. 6% of your account. You made it in a week. 6% is a lot. Not a lot of people make 6% in trading, bro. So this is a retracement, right? But I know this is just inducement to induce them niggas. And look where it reversed. Break with displacement, where it would be my next drawn liquidity this year. Inside what? Inside this fair value gap, bro. Inside what? Inside this fair value gap. But because I entered here, you can enter if you're like I'm late. You can enter even this trade here. Retracement. Where's my drawn liquidity? My drawn liquidity is this one. Internal buy side liquidity. That's my. Okay, let me just go to today's. No, I think this is not the one, bro. Yeah, I think today continuation to buy side. That was my trade idea that the market will continue to buy, right? So what did I want to see the daily candle to continue to deliver price to the buy side. My eyes are on the internal liquidity, internal range liquidity as a drawn liquidity. This is the internal liquidity I'm talking about. This one. So that's my draw on liquidity. So currently the market is doing what? It's heading there. So this is just an inducement. I know when it does this, it's just you might think it's reversing, but it's not reversing actually. You know, and the forex markets, it's nice, especially Nasdaq. Nasdaq moves, unlike forex. Forex, I was trading forex, but I realized that nah, bro, it's not giving. You understand? But this, look at this. Previous days, it used the previous days high as a what? It used the previous day's high as a bellwether, as a rock climber actually, combined with this fair value gap to continue going up. So for me, I would have entered my single trade and I'm out. You can trade two trades a day. I don't know, but you should always have a plan when you enter the market. Don't just enter the market without having an idea of what you want to do, or having a clear idea of what you're trading, because you're gonna make a lot of mistake. You're gonna make a lot of mistake. You understand? You understand? Look at yesterday. Yesterday, this was yesterday's trade, right? I think everyone saw that. Just that I'm a bit busy at the moment, so I just wanted to show you that how I would have entered this trade, right? Because today I couldn't trade. I was a bit busy, and tomorrow is Friday, so you wouldn't predict the high probability trades are not quite there when you're trading in the NFP week, especially when it's Thursday. For me personally, I don't know about you, but for me personally, you understand? So yeah, let's see. For me, I'm done because the market just closed. My kids don't just closed, so yeah, I'm done. Thank you.